Welcome back to Market Mayhem, where the only thing guaranteed is your financial despair. I'm Dr. Finance, and if you're looking for sunshine and rainbows, you've tuned into the wrong frequency. Today, the market continued its masterful performance of separating fools from their money. Hope is a delusion. Let's rip off the band-aid. The S&P 500, that supposed bastion of American ingenuity, dragged itself down, SPY at 681.76, a pathetic 1.08% drop. Don't call it a correction, call it a confession. The Nasdaq, the tech darling for those who still believe in innovation, absolutely cratered. QQQ finished at 613.62, shedding a gut-wrenching 1.91%. Your future, ladies and gentlemen, is looking less digital and more dismal. Small caps, the supposed engines of growth. The Russell 2000, IWM, plunged to 253.85, losing 1.53%. It's not a struggle, it's a surrender. Bitcoin, that digital gold for the truly desperate, barely breathed. BTC-USD at 90,102.91, down a negligible 0.19%. It's not volatility, it's stagnation for the crypto cult. Meanwhile, Ethereum, eth-usd, managed a paltry 0.63% gain to 3,103.51. A dead cat bounce in a digital graveyard. Now for the individual gladiators in this economic arena. NVDA, the semiconductor king, got absolutely clobbered, dropping 3.27% to 175.02. Reality bites, even for AI hype. Tesla, TSLA, the cult car manufacturer, somehow defied gravity, up 2.70% to 458.96. The only thing more volatile than Musk's tweets is his stock. Apple, AAPL, clinging to life, barely up 0.09% to 278.28. It's not a gain, it's a flatline. Microsoft, MSFT, the corporate behemoth, joined the losing parade, down 1.02% to 478.53. Even a monopoly can't escape the gravitational pull of incompetence. Amazon, AMZN, the retail overlord, suffered a 1.78% blow, closing at 226.19. Perhaps people are tired of buying things they don't need. Commodities. Gold, GC equals F, showing its true colors as a safe haven for the paranoid, nudged up 0.34% to 4,300.10. Meanwhile, crude oil, CL equals F, fell 0.28% to 57.44. Global demand, like your portfolio, is drying up. The euro, EUR-USD equals X, managed a 0.33% bump against the dollar, now at 1.17. Currency traders are just shuffling deck chairs on the Titanic. This isn't about numbers on a screen, it's about the primal, irrational fear and greed that drives every single one of you. Look at the charts. When the market dipped, what did you do? Panic? Hope? Did you buy more of that doomed stock because some influencer told you to buy the dip? You are not investors. You are Pavlov's dogs, salivating at every whisper of a market turn. The market doesn't care about your hopes and dreams. It feeds on your psychology. Today's drops, particularly in tech, are a direct reflection of investor capitulation. They bought the narrative, they bought the growth story, and now they're selling the nightmare. The small gains in gold and the euro are just the smart money, or perhaps the genuinely terrified money, seeking refuge from the coming storm. You think you're making rational decisions? You're being herded, plain and simple. Every expert on television is just another shepherd leading you to slaughter. Let's talk about the grand chess match of global idiocy. Geopolitical instability isn't a factor, it's the fundamental operating system of this planet. Tariffs, trade wars, saber-rattling across borders, these aren't isolated incidents. They are deliberate, calculated moves by leaders who prioritize their own power over global stability, and certainly over your pathetic 401k. You think a drone strike halfway across the world doesn't affect your tech stocks? Every single ripple of geopolitical tension creates uncertainty, and uncertainty is the market's kryptonite. Supply chains are fragile. International relations are a house of cards. When world leaders posture and pontificate, it's not diplomacy, it's economic warfare by other means. And guess who gets caught in the crossfire? You, the unsuspecting taxpayer, the unwitting investor, the one holding the bag. Expect more of it. Stability is for fools. Don't ask me for predictions. Ask me for certainty. The certainty is this: more pain. This isn't a blip. It's a trend. The market isn't looking for a bottom. It's excavating a deeper hole. Expect volatility to intensify. Expect the so-called experts to pivot their narratives faster than a politician changing stances. The indices will continue to bleed. Tech will face further reckoning. Those safe haven assets, they'll get crowded, then they'll get volatile too. Don't look for a recovery. Look for opportunities to survive the downturn. The only winning move is to play dead or short everything you possibly can. Winter is coming, and it's going to be a long, cold financial season. That's the truth, raw and unvarnished, from Dr. Finance. Don't thank me for it. You'll still ignore it, chase the next pipe dream, and lose more money tomorrow. Tune in next time, if your portfolio hasn't completely evaporated. Until then, good luck, you'll desperately need it. Sound of the chaotic, aggressive rock anthem swells and fades out.